From Dubai, I am joined by Mr. Arun Leslie John, Chief Market Analyst at Century Financial. Good morning. Thank you so much for joining me, Mr.
Good morning.
Arun.
Yes.
Uh, uh, the futures of the US markets are up now after the losses we saw yesterday after the decision by Bank of Japan. So my question is, why are markets rejecting those declines? Is it a signal that we are seeing continued rebound in the market?
Yes, the US market, SPS 500, and the major US benchmarks, they recovered in yesterday's session, but that does not mean that the recovery will be sustained. So, yesterday's decision by Bank of Japan is a landmark one in the sense that uh, Japan was the last bastion of ultra loose monetary policy across the world. So when Bank of Japan abandons its yield curve policy, in which it fixed the index yield to 0.25 percentage, it means that inflation has taken root in Japan also. Now, this will be having significant ramifications for across the globe because Japan is a net exporter of capital due to its large current account surplus. It has uh, exports which are much larger than its imports. So, because of this, Japan traditionally has been a very large buyer of US treasuries as well as assets across the globe. Now, with Bank of Japan easing its yield curve control cap from 0.25 to about nearly 0.50, markets are also expecting interest rate hikes in Japan. So, it is highly unlikely that Japan will be investing the same frequency this year or in the coming months. So, capitalists, Japanese investors, large funds like the pension funds, insurance companies, they might hold back their investments to the international markets. So, the net impact will be negative for the global asset markets in the coming quarters. So yesterday's rally, I think it's more of a short covering rally. Maybe it might continue for a few more days, but the first quarter of next year is more likely to be a bearish one, especially if we see the results which came out yesterday. FedEx reported its results. So even though its earnings was pretty strong, sales were on the lighter side. The volumes declined. It shows that FedEx is a major logistics firm operating across the world. So when it shows weaker sales, it shows that the global economy is weakening. This at some point in time will be reflected in the equity market valuations. So first quarter, maybe going into the year end, there might be some small rally, but first quarter of next year and maybe even the second quarter is likely to be on the weaker side.
If we move to talking about Japanese yen, it is still making gains against the dollar. Do you think the yen will continue to appreciate against the dollar, or you think it is just temporary gains and will decline again?
I think it is not temporary. The gains in yen are likely to continue even further for the simple reason that a large part of the market bet was on the long side of yen. So there will be a lot of traders who will be unwinding their long positions. So that itself will be giving supporting the yen buying. Other than that, as we know, the US Federal Reserve has indicated that the terminal rate might be 5.25 percentage. So previously they had said that it be markets were expecting the terminal rate to be somewhere around 5 percentage. So the terminal rate has not moved that much. What we know is that the US is more towards the end of its rate hike cycle, whereas Japan now markets are beginning to price in rate hikes from Bank of Japan next year. So there is a high probability that Japanese yen will appreciate from here onwards because the yield differentials will be narrowing between US and Japan.
how will this impact Japanese corporate results which export to the rest of the world?
Negatively, of course. A rally in Japanese yen is negative for Japanese corporates because most of them are dependent upon global markets. They export a lot. They are a huge exporting nation, so it's negative for the large Japanese corporates. But some of those corporates, like which have, but the impact could be neutral for energy companies which are importing from outside. They will not. The price will be lower for them. Uh, the impact will be positive for Japanese banks because they will be able to get enjoy higher net interest margins. So when we talk about Japanese stock market, the impact will be mixed. Banks will be beneficiary, energy companies will be benefiting. Overall inflation inside Japanese economy might come down a bit because when Japanese yen rallies, imports will be less expensive. Um, so the impact is mixed, but exporting companies, it will be slightly towards the negative side.
Thank you so much, Arun Leslie John. Thank you so much for having joined us from
Sure.
Century Financial. Have a nice day.